I think one of the concerns I had with the MOU was the lack of roles and responsibility delineation. So there was sort of a general thrust of the intent that the banks had in terms of how they're going to address and what they think is a useful means of addressing the interest rate issue. But I didn't see a lot of roles and responsibilities. Another concern that I had with the MOU was, are MFIs a part of this conversation? And this is part of the larger conversation around, is this interest rate capping including MFIs? Because if microfinance institutions aren't part of the conversation, I think we're missing half of the story.
Derek?
Well, I don't know what to make of it. Obviously, they've gone beyond, if you ask me, what they ought to have done. Because if you look at what the crux of the matter is, it really is outside, is external to the banking sector.
I can tell you don't agree with what he's saying.
I think their intent was right, and that's why I made the point about roles and responsibilities. I agree with what he's saying, that I don't think the banking sector has the competence, for example, to do the sort of support or to SMEs and women and youth businesses. But I do think that it is good that they're doing that, because part of the problem that they're facing and part of the problem that informs the high pricing of interest rates is that a lot of businesses are not managed very well in Kenya. 9 to 10, I mean about 82% of Kenyans are employed in the informal economy, and most of those businesses aren't run very credibly. So part of the problems banks are having is that even if they wanted to loan, there's a certain pool that they just cannot reach, and they just cannot give attractive loans because of the way the businesses run.
There was something the CBK said yesterday, not just in the statement, but also the governor made a fair point on this. He repeated it a couple of times. More needs to be done as banks continue reviewing their business models. And it was a two-sided hydra, because on one hand he said banks need to do a lot more, but also they as the regulator need to do more as well. Do you agree?
I do agree. I do think that there needs to be, and I think I support the CBK in the general thrust of them saying we need to lower interest rates. But I think the part of the conversation that's missing is, what are Kenyans doing that is begetting or engendering the situation as to what it is? Of course, a larger part of the conversation here is fiscal policy. And I think that's the part that Kenyans don't understand, that the pricing of interest rates is not unique, is not something that the banks wake up and just decide we're going to price it at this rate. There are also things such as fiscal policy, and I think people who should be part of this conversation as well is the Treasury. Because in my view, the way that they formulate budgets is problematic, because they understate how much they're going to spend, and then they overborrow in the domestic market, which then pushes up interest rates, and that's what we saw towards the end of last year. So I think if Treasury is not also part of this conversation, and that dynamic isn't managed, whatever the banks want to do will not necessarily have the effect they want.
And Derry, you're the banker here. Section 44, Banking Act, which basically means you guys have to ask the minister in charge of finance, or the cabinet secretary in charge of finance at any given time, for any charges that you want to levy. Isn't that the nuclear option here? Couldn't Henry Rotich wake up in the morning and say, I'm limiting charges to X, Y, Z, I'm not going to approve any new charges you guys want to levy on clients?
Two things. First of all, I'm not in the banking sector.
You work for ABC Capital.
ABC Capital is in the capital markets, and we don't have a balance sheet. Yes, we are fully owned by we're majorly owned by a bank, but I am not in the banking sector. I'm in the capital markets. And that is one of the initiatives that has that is not being discussed about, because Anzasa spoke of fiscal policy, but also the capital markets supposed to be coming in and help manage the situation, because see, the capital markets is where long-term financing is, and banks have short-term funding, and we risk a mismatch when banks are asked to finance long-term investments. And that's one of the problems we have in Kenya, is that the banking sector is being asked to play a bigger role than it ought to.
One of the problems that I'm having with this whole conversation is that Kenyans are not critiquing our preponderance or our obsession with debt and loans. There are different types of financial vehicles that can be accessed by Kenyans, particularly if you're running a business that is a social enterprise and is aimed towards developmental ideals. There's a whole bracket of funding. It's still quite young, but it's there. In terms of getting concessionary rates, getting interest rates that are lower, having a package that is financed by grants, etc. So I think one of the problems that's creating this pressure for financing is that everybody thinks of loan and going to a bank, and that's how I'm going to finance my business. I think if we were more creative as Kenyans in terms of, well, I really want to start a business that processes fruits and sells it to local markets. Why do I need to go to KCB or ABC for that matter for that money? Why can't I look into, are there impact investors that I can go to? Is there an angel investor? Are there grants that I can access for which I could qualify? So I think part of the reasons why banks are in this beholden position is because Kenyans think that's the only way they can grow their businesses.
And this goes to both of you, but isn't there, at least within the Kenyan context, a cultural aversion to the idea of, I'm going to go to Johnson and ask him to take equity in my business and fund it that way?
Absolutely.
Because it's my baby. Who are you to come in and tell me that I should run my business in this way?
Yeah, and you're right. But you see, there's a trade-off here. You're a business, you need capital. There's somebody with capital, and he needs to deploy it. And therefore, both of you have a reason to work together. And that's why the capital markets exist, to help you do that. And now, the entire financial markets actually exist for the same reason. Banks also lend other people's money. But banks are constrained because of the risk they're allowed to take. So, and indeed, banks have been taking more risk than they ought to have. And it exposes them in a bad way.
Right.
I don't think banks are taking on more risk than they ought to. I think the banks are under the impression they're taking more risk than they ought to because of the asymmetry of information. A lot of the conversation around this is about creditworthiness, and there was and this has been a theme that's been going on. And of course, many Kenyans don't know their credit scores. They don't know how to access them. They don't know how to use them. They don't know what it means. So when a bank is looking at a client and they don't have that body of information, that client could be an excellent borrower, but they don't know, or they could be a horrible borrower and they don't know. So what do? They lean towards the high risk. And so I think also, as the ability for Kenyans to get access to their creditworthiness and get a good sense of how to have a credit score and how to use that to negotiate loans, then banks won't be able to keep on telling us you guys are very risky. But that has to be balanced with the informal business management.
And we're going to come to you, Nderi, because I know we talked about this a lot on Twitter. But here's the part where a lot of us have questions for banks. CRBs have been in operation for the better part of the last 3 years in this market. And it's relatively straightforward. Yes, a lot of people may not know this, but it's pretty straightforward to get a credit score. I mean, you can literally do it on your phone these days, pay a nominal fee, and you know what your credit score is. So why do you guys still tell us that we don't have enough information to actually use credit scores to provide differential pricing of loans by default? I shouldn't have to come and ask you for that.
And the question could be asked even in the capital markets, because we've had credit rating for a while now. However, what does it mean to have a score of X or Y?
All right, you've got a 700 score, which is, according to Metropole and a lot of the other CRBs here, is pretty good. So what's wrong with it?
But what does that mean in terms of, in Kenya's context, in terms of probability of default? If you go to a place like the US, you can be able to and you'll be able to know what the probability of default is, and over say a long period of time, because they've been able to look at the variances and the variance of variances, and able to tell you with a lot of certainty that if you lend with somebody, if you lend to somebody with a credit score of X, then the probability of default is Y, and therefore it's easier to price. But in Kenya's context, we don't have that information yet.
There's an immaturity in the market that Kenyans are being very impatient about.
But how immature is this? And I asked you this yesterday. How much is enough? How enough is enough? Because you've got banks here that have been operating, in some cases even before independence. They've got access to reams and reams of historical information on default. They've got access to tons of information on income levels in this country. How do we not know how can we not make that link between probability of default and income levels?
I actually was a resource person for somebody who was doing a PhD in analysis of credit. They're trying to develop an early warning system for credit delinquency, when they jump out, And one thing that it was very obvious to us when it started out is that there was actually no information. So it's no different for banks, because the information that they do have is limited to what they have. But you see, if I want to know what Johnson has, I have to be able to know how many lenders does Johnson borrow from, and how well has he performed against all these lenders.
part of the, and I do agree there's not enough information, because part of the problem is that a lot of Kenyans are out of that information net. If you think of a rural woman running an informal shop in Kakamega, she and credit score, do they ever speak and do they ever meet?
Informality being the problem.
Informality is the problem. And I feel that if, as Kenyans, we want to get to the bottom of the situation, we need to demand that there's an awareness drive around what does credit scores means, how do I get access to it, if my business is informal, what do I need to do to still show that I'm credible? There needs to be practical ways through which Kenyans can improve their lot. And I think a lot of what's happening here is that there's no information, but there's no impetus to change that. It's just sort of, well, it will take time for it to happen. I think there needs to be a bit more, it needs to be a bit more proactive in my view.
MFIs are your particular focus, especially in
Yeah.
the context of this particular debate. If, let's say for argument's sake, given the current political climate, because we're 12 months away from an election, let's say for argument's sake that Uhuru Kenyatta does sign that bill into law, where does that leave MFIs?
This is my question, is are MFIs part of this conversation? This conversation has been dominated by commercial banks. And in fact, I asked this during the meeting yesterday with the KB and the CBK, and I didn't get a response. And I said, if we're not looking at MFIs as part of this conversation, we're really wasting our time, because the whole push that the MPs had on this is for the common Mwananchi, the Wanjiku that doesn't have a voice. Wanjiku will not borrow from Barclays, she'll borrow from Jamii Bora or whoever, or whatever small, if she's in the formal system. What Kenyans seem to be forgetting is that when loans are being priced, one of the things that are looked at is operating costs and also the performance of loans. MFIs, because they do so many small loans, have very high operating costs. They need more credit officers, they need to do more processing of documents, so they have very high operating costs. So when you tell them, well, now you're going to cap our interest rates here, that will constrain how many loans they can process. That will constrain how many loans that they can give out. So there's that practical reality of why aren't MFIs part of the conversation? And number two, if they are part of the conversation, what will happen is that Wanjiku will get even less money than she's getting now.
Someone looking at Kenya's financial sector would look at things like Mshwari. Save on this amount and I will lend you X amount of money. And it's all done on mobile phones. I don't go to a branch. All the information you have on me is basically my identity number, information that's provided to you by my cellular provider, and that's pretty much it. If we can hack delivery of a product like Mshwari, why can't banks, or even MFIs for that matter, reduce the operating costs?
Well, it depends on the operating model that you have. If you trust and are able to access borrowers through that platform, and you've got a credit policy that takes all the risks into account and able to secure repayment, it's a way to go. But it's not always the case for everybody.
Right.
I think the issue should be, how do we use mobile platforms to build credit history? That to me is the issue. Why can't we use them? Mshwari, and there's so many. There's even one that was recently relaunched where you use mobile borrowing to start building up a credit history. And I think that sort of innovation and ingenuity is what's missing, because even looking at people's M-Pesa transactions, their spending habits, and another big issue that I think is being missed in this conversation is that we can't really compare Kenya to the USA when it comes to credit rating, because they have a welfare system that takes care of people. I may be in a position where I'm paying my loans very well, then my mother gets sick and my savings are gone and my financial situation completely changes.
No, we actually do have welfare, and the government has stepped in education. It's tried to provide free maternal health care. It's tried to, initiatives with NHIF. But the flip side of this is that you also pay more in taxes. You pay, because the people who are actually supporting this are few. You pay more in taxes, and has made us very uncompetitive as a country. And
that's more to do with why the tax net is so narrow. The tax net being narrow is the reason why people are being overtaxed.
But even if you widen it, what will just happen is that you'll get less of other taxes and more of other taxes. Because if you look at how much we're able to raise in form of taxes in Kenya, we do about 20-something% of GDP, which is pretty much where the US is, and not many countries have done more than that. It's very difficult to surpass that. I think we ought to be cutting our cloth our coat to our cloth, and which brings me to another point that why interest rates are very high, and it's savings, because if without savings, what are you lending?
That's the welfare state point. You're talking about education, etc. I can assure you, people go to public school as a last resort. And if they can find an uncle or an auntie that can take them to a nice school somewhere else, and even public schools cannot absorb. That's why you have all these informal schools in slums and informal settlements, because that capacity is not there. So I think the welfare state is an issue, but also the biggest elephant in the room is financial mismanagement by government. And I think that's why the story of taxing becomes quite sensitive for Kenyans, because we are still yet to believe that our money is being managed properly and in a prudent manner. So I still feel like there are two things going on. One, we can expand the tax net, I feel. I think if we worked and really created a strategy for the informal economy and made it more productive and more profitable, a lot more people will be able to pay taxes. And number two, there needs to be more accountability in terms of how the money is spent.
All right, let's wrap this up. Savings has been a big issue in this room, especially on the informal side. How do we boost those saving levels? Because it's one thing to say, yes, we've got all these extra spending that we need to do in the form of the welfare state, quote unquote. But on the other hand, we're running unproductive businesses, we've got very high overheads, and we're not really trying to make these businesses informal. And even jumping that hurdle to become informal is pretty difficult. So
I mean,
how do we save?
This is a part of the MOU that I thought was interesting, is that they were sort of talking about a capacity building program for MSMEs, which I think is useful. I think there needs to be a very systematic county to county process of assessing the number of informal enterprises, what sectors that they're in, and really starting to do training. And this can be one of the ways through which interns in university can be absorbed into the economy, where you have guys who did accounting or economics, etc., mentoring that guy who sells the bread and milk at the corner shop, or the guy who repairs cars, around the corner, and really getting them to a situation where they learn how to manage their businesses more credibly, because you can do all the training you want, and training is crucial. But what I've found in the work that I do with mentoring businesses is that mentorship is a crucial part of showing businesses how to solve the problems that affect their profitability and their productivity. So I think for me, this is a big gap that government needs to look into, and other stakeholders. And that's the part of the MOU that I thought was well-intentioned, but I don't know how they're going to implement that as bankers.
There's a lot of detail lacking.
Yeah, and also I don't know if that's their area as bankers. I think that should be something that is done by people who have expertise in that area.
Do you think Uhuru Kenyatta will sign this? Yes or no?
I think he's damned if he will, damned if he won't. Because if he does sign it, the popular opinion will be against him. If he doesn't sign it, if he does sign it, the technical people will be against him. If he doesn't sign it, the populists will be against him. So he's got one side where he's got the Wananchi and the guy who's really bought into this populist rhetoric that the MPs have been pushing, that if you get lower rates, you'll be able to have money, grow your business. So there's that side. Then you've got the technical guys who are saying, well, actually, there are going to be ramifications that may negatively affect the economy. So he's in a very tricky position. I don't envy him.
Johnson? Will he sign it? Will he not sign it?
I don't know, but I don't envy him
Yeah.
for pretty much the same reason she's put forward.